Thanks for listening to A Long Time in Finance with Jonathan Ford and Neil Collins, in partnership with Briefcase.News, the service that brings intelligent curation and analysis to your media monitoring. Hello and welcome to Long Time Shorts, a new series of shorter than usual episodes of A Long Time in Finance, each one of which gives you a quick hit of financial history, from the debt jubilee of ancient Babylon to the latest crypto calamities.
A very long time ago, I started work on the stock exchange, and it was an extraordinary place, and it was full of two types of people, really. There was the brokers, who generally were overeducated and often not terribly bright, and the jobbers, who were the wholesalers, essentially, who were more like barrow boys and had little education, but they were very bright. And the two cohabited in this rather strange universe.
Take us back to day one as a nervous young Neil Collins arrives on the... Well, it was a bit of a Victorian mausoleum, was it? Anyway.
No, the trading
they'd
floor.
Modernise it.
The trading floor was quite lively,
right.
And I was what was called a blue button, which meant that I could go onto the trading floor, but I couldn't trade.
Right.
And so
what could you do?
Take instruction, I think. And
so you were running around with bits of paper.
Collect prices, yeah, exactly. Running around with bits of paper, seeing what was on the jobbers' boards, relaying the information back, answering the telephones in the stockbroker's
So they had
box.
telephones.
They had telephones. And they used to come with flashing lights. And I remember my first day, I answered the telephone, heard something, took an instruction. Another phone immediately rang, and I completely forgot about the first one. And that was a kind of...
Was that a big order?
Serious error, yeah. So I never answered the phone again without a pencil and paper in my hand. Because otherwise I would have been completely lost. I mean, there were about 30 telephones around the walls of this box, right, which was about 9 feet square, I suppose.
So situate us in time. We're talking about the city in when? The mid-70s? Early 70s? Late 60s?
This is 1968, yes.
68, okay.
When the FT 30 share index reached its all-time peak in real terms. It was quite extraordinary, September 1968.
And it was all downhill from there.
It was downhill ever since I got there, yeah. And obviously I was the thing that corroded it to the point where it was no longer sustainable. The stock exchange and the stock market carried on in its own little way, its own little club, for a lot longer than that. And it carried on, hardly noticing that the City of London was changed out of all recognition, partly by the euro-dollar market, which saw huge billions of dollars parked in London because they didn't want to take them home to America because they'd be taxed, partly through the emergence of derivatives of one sort or another. And the stock exchange just carried on quite happily in its own little bubble. But having said that, it was a key price setter for a lot of securities. And that is a very important role. So the derivatives, which were much bigger, were all priced off the stock prices which were posted in the stock exchange.
Okay, so it's very important, but it's becoming, as you say, even despite the infusion of Collins' energy and enthusiasm and pencils, it's becoming a bit of a backwater, and it's sort of not very important in terms of although it's very important, it's not economically becoming very significant in terms of what the city actually does for a living, because
I think that's right.
It's just stuck in the Victorian past with people in bowler hats.
And to be fair, the Labour administration under Wilson Callaghan saw this and insisted that this restrictive practice, which allowed fixed commissions.
Okay, so if I buy a share, I have to pay you, Mr. Collins, the broker, 3%, was it?
No, it was less than that.
Okay, but some fixed percentage.
Yeah, it was.
And I couldn't ask for a volume discount. I just had to pay up on the nail.
No, there were all sorts of quirks and oddities.
So I couldn't negotiate.
No, you couldn't negotiate, but there are certain bands at which you got lower commissions.
Oh, I see.
And if the broker found a buyer and a seller of the same stock,
right,
then there was another set of rules.
Okay,
so
let's not go into them.
As always with these things, nothing is ever simple.
Okay.
But essentially, the commissions were fixed and you couldn't do anything about them.
Right. But the world is beginning to change in the 70s, isn't it? Because America has had a similar system but got rid of it. Don't know what's happening in Europe. Probably they're just really not very interested in stocks and shares at all.
I think that's right.
Right. So, as you say, Callahan and Harold Wilson scratch their chins and decide to look into whether there could be some fishy business going on in the square mile.
So they found a man called Gordon Borry,
who
ran the Office of Fair Trading, and they said, please look into this because it's a restrictive practice. And he started doing so, and I think you could call it the Stock Exchange Club immediately started playing for time here. But then Labour lost the next election, and the Tories, much to the disappointment of many of the stockbroking friends, decided to continue with this. So the Office of Fair Trading stepped up its investigation and was on the point of starting a court case against the stock exchange.
So the stock exchange is backs to the wall. What happened then?
Well, the stock exchange had a chairman called Nicholas Goodison, who, although he looked like a sort of brisk breeze would blow him away, was actually quite a tough character. And he led the rearguard action. And he produced, or his office produced, 500,000 documents, basically just to try and clog up the court, so to play for time so that it would go on as long as possible and keep this cosy cartel going.
Right.
And
so he didn't think he could win. He just thought he'd just carry on boring everyone to death.
I can't believe he thought he would win, because it was clearly a restrictive practice,
right,
and it was not obviously in the public interest. So if you have a restrictive practice that's not in the public interest, you shouldn't allow it to continue.
Right.
I think he realised that this was not a great way to behave, and eventually wrote a letter to the...
So when was this? The summer of 83, I think.
That sounds right, yes. To Cecil Parkinson, who was the Trade Secretary.
Yes.
A handwritten letter to him saying, if we agree to scrap fixed commissions and all the other bits and pieces which attach to it, will you please drop the case?
And Cecil says, absolutely, no problem.
Absolutely. We'll drop the case because actually that's the outcome we wanted.
Right.
At that point, the clock was set ticking to scrap the whole setup and replace it with essentially a free-for-all.
Yeah.
Because one of the other things that
a free-for-all in the sense that you can, all fixed commissions go, the rules of the stock exchange get changed more broadly?
They get completely revamped because instead of having two classes of member, you only have one.
Right.
But the other key change was that outside capital could come in. So a big bank could come along and buy one of the firms of brokers and use that as part of their integrated securities operation in London.
Right.
And there was a sort of mad scramble to buy the biggest brokers and jobbers, and the successful buyers were nearly all these big American banks.
I see. So you have what? You have a period of time after 1983. I think Big Bang is 3 years later?
Yeah, 86.
So in between you have a kind of everyone being bought up, all these old little stockbroking partnerships, the sort of thing you used to work for, being bought up by bigger firms.
The capital came in when the rules were changed in October 86. So they had 3 years to prepare. And obviously all the systems, which were in turmoil anyway as new technology was coming in. So the old stock exchange floor was seeing an ever diminishing share of the business, and more was being done over the telephone and increasingly on data. So that part of the revolution also undermined the old system, which essentially relied on face-to-face communication.
I mean, I also worked briefly in the city just after Big Bang. What I saw was there was a very strong culture around the old city, which was kind of people would drink at lunchtime. Financiers would tend to be fairly passive sort of figures who would wait for people to tell them what to do and then basically take the fee for doing it. And the arrival of all these foreign firms, we talk about Wimbledonization, the idea that, the UK is a venue, but lots and lots of foreigners coming here and winning most of the tournaments. You started to see an influx of, first of all, lots of people who weren't the sort of Brits who'd been working in the city for generations, and then you changed a lot of the culture changed.
Yeah.
People no longer went out to lunch for 7 hours.
Quite, and it suddenly became a sort of meritocracy rather than a cosy club.
That's no good.
And the exchange had to incorporate, the firms had to incorporate, and the American trading culture essentially took over. And it saw a huge expansion in employment because, as you say, these people were proactive and they would go to these large companies and suggest deals to them, something which the Brits really never quite got the hang of.
Yeah.
But if you look at the leading players now, they're all American. All the leading houses, bar one, were immediately snapped up.
The other thing which seemed to change was that you had, instead of having, you talked earlier on about a club, which I think is absolutely right. I think it was a club. You had the Bank of England, the governor's celebrated eyebrows going up and down and people doing what they were told, but having a sort of terrifying 10 minutes in the headmaster's study from time to time. But you end up with a much more legalistic system. You have rule books that are written, and even now we have constant debates about whether the rule books work and so forth.
I think rule books are an essential part of something which is international, where you have people with all sorts of backgrounds. The employment in the city today is truly multinational. Both the companies and the individuals are from all over the world. You couldn't really expect them to understand some slightly odd club rules. You would never have managed to create the sort of huge industrial engine, really, that the city is today.
In summary, you have this huge, huge change. Out go the bowler hats, out go the kind of blue buttons and all those things, people running around the stock exchange floor. The stock exchange disappears as a venue where people kind of trade in person. And you have all these sort of cultural shifts. Do you think it went as well as could be expected?
Absolutely. The London Stock Exchange, which used to be a cosy club, is now a very substantial international business, listed on its own exchange. The American banks may have dominated the British markets, but the financial innovation and freedom and highly paid employment they've brought set the conditions for the UK's only true world-scale economic success story for half a century.
So, a triumph of modernisation. I still feel a bit sad about the bowler hat, I have to say, but never mind.
Well, you're still allowed to wear them, I think. That was A Long Time in Finance with Jonathan Ford and Neil Collins. Production and editing by Nick Hilton, and our sponsorship partner is Briefcase.News. If you enjoyed the show, please rate and review it on your podcast app, as that will help new listeners find us.